Fast-spreading coronavirus from China is a threat to Nigeria's primary source of revenue, which is oil. If it remains in the $50 threshold for a significant period of time, then the country could begin to see even more pressure on its exchange rates as well as its already struggling fiscal space. Meanwhile, Nigeria has executed an aggressive tax boost, which many or some have criticized as a further dampener for an economy that needs all the help that it can get. To discuss this and other issues, we have a senior partner at KPMG, Mr. Ajibola Olomola, who is a partner and head, deal advisory, tax regulatory, and people services. Sir, good morning. You're welcome to the Global Business Report on Arise News. Now, let's start with the fiscal space. Some say that Nigeria's fiscal space is as tight as ever. How do you see things on that regard?
Well, it certainly is tightening. We saw recently an increase through the finance bill of the VAT rate from 5% to 7.5%,
yes,
which for most people will represent an increase in tax spending. That is supposed to have an effect also, hopefully not too much of a dampening effect on consumer spending. So obviously with tighter controls around spending, which will be introduced courtesy of the Finance Act, what you then find is that the environment is getting a bit tighter. However, you must bear in mind that this does not signal further tightening down the road, as opposed to further closure of revenue gaps, because Nigeria currently faces a revenue crisis,
yes, indeed,
and not so much crisis in other areas.
Yeah.
So if you can close the sources of revenue losses to the Federation account, then Nigeria might be able to ride out the storm.
Okay, so with regard, since you mentioned the Finance Act of 2019, which of course has been signed into law by President Buhari, what would you say the reaction has been from your purview?
Well, the reaction has been nuanced. So we have had the Minister for Finance, the Director General of the Budget Office, the Chairman of the Tax Authority engaging with the public and trying to communicate their message in terms of what they want to achieve with the Finance Act, engaging with the manufacturing sector, engaging with the finance sectors. And I think that has helped calm a lot of frayed nerves. Now, for those guys in manufacturing, obviously, they are worried as to how they will be able to pass on the effect of the VAT increase to the last mile, which is the consumer. So there is some sensitivity around that. So I will say, yes, a lot of people are concerned as to what this might mean for demand, and whether or not we will have a dampening of demand in the fast-moving consumer goods industry. But for the large part, if the government continues to calm those frayed nerves, we might find that people are a little bit more welcoming. A lot of people are very happy with the tax exemptions that the Finance Act has introduced, for example, particularly for the small and medium-scale enterprises sector. Those are seen as very positive stimulus, which could also help stimulate their own demand at that level of the economy.
Fantastic. Now, one big talking point is the informal sector. Yeah, it continues to come up again and again when we, in fact, some opposition to this with regards to raising VAT has been, okay, instead of raising tax rates, why don't you expand the net? What changes, if any, have you seen with regards to expanding the net to include folks that are operating in the informal sector?
Well, in a little bit of a break from tradition, you have so many regulators working in harmony right now to try to address this problem. So you have policies that are being enunciated by the Central Bank of Nigeria to try to try and increase financial inclusion, get more and more of the economy coming into the formal sector, opening bank accounts. Then to now complement that, we have the Finance Act that is exempting from tax small operations below a certain threshold. And that is a significant incentive for small businesses and medium-scale businesses that were previously not in the formal sector to come into the formal sector, obtain their BVN numbers, obtain their tax identification numbers, come in from the cold, and then participate. So what I think is that if policymakers continue to work in harmony, you're going to find that a large section of the informal economy is going to start migrating into the formal economy. And of course, once they're here to stay.
Right. I want to follow up on that. I have an idea. Because some have said that they aren't moving fast enough, but they'll like to move faster. What if they utilize you and I? So here's an example. My barber, for instance, could be part of the informal sector, or a vulcanizer that pumps my tire. Now, what if I was to quietly take their names down and their information and then hand it over to essentially reporting them over to the authorities? Do you think that, because the key has been that there are not enough officers within the tax authorities to be able to mobilize these folks? And as you said about bringing them in from the cold, some of them don't want to come in from the cold. So what about us that patronize them being mobilized to do that? You think that might work?
So you're thinking whistleblowing. That's a brilliant idea.
Yeah.
I think given the existential threat Nigeria faces from a revenue perspective, every idea is welcome.
Right.
And in fact, the government has tried a bit of that in previous times when they enunciated these tax amnesty schemes, the voluntary asset declaration scheme, by which they tried to encourage Nigerians who were in the cold to come in, make a declaration, do the right thing. And if you don't do it by a particular point in time, the government then had the ability to come after you. So whistleblowing might have a role to play. But the regulators are still operating on the assumption that Nigerians, by and large, want to do the right thing. If you provide Nigerians with an opportunity to come in and contribute to national development, we feel Nigerians will do it. And I think we should encourage the government to continue to think in that direction. Of course, if all else fails, then you have no choice than to look for enforcement.
All right. Okay, so let's shift gears now to oil. With regards to the coronavirus, we've seen what it's done to oil prices. I'm imagining a doomsday scenario here, which I don't know if we're not that far, 52 or 53 or so dollars per barrel now. If it was to drop below $50 per barrel, right, and we're at 57 with our benchmark price for the 2020 budget, what kind of implications do you see? If it's, or maybe even drops below $40 a barrel, I mean, how do you see things?
Hopefully not.
Right,
hopefully not. And of course, it's early days with the coronavirus. And hopefully, we're beginning to see the virus peter out in terms of its mortality rates and also the spread across the world. But you're right. The budget was predicated on the $57 per barrel benchmark. We're now around 53, courtesy of Corona. If this is sustained for a long period of time, then obviously you're going to have a wider deficit for the 2020 budget. And the question will be how the government can react to that. Oil and gas currently contribute about 36% of revenue to the budget, to finance the budget. Then you have non-oil taxation, you have other revenue sources available to the government. So the question would be, how quickly can the government react to low prices? One, are we going to be able to ramp up production? The budget was predicated on a 2 million barrel per day production level. Nigeria is currently not able to achieve that capacity, but I know NNPC is thinking through how they might ramp up production and possibly attain or exceed that. So can we get OPEC to allow us to produce more? That might be one reaction. It could be that we then look at other sources of revenue to the government, including tax revenue. Because if you think of the tax to GDP ratio of Nigeria, that's currently at 6% of GDP, yielding about 8.7 trillion revenues in terms of tax. If we were simply to move our GDP ratio to, say, 15, 20% of GDP, Ghana is 20% of GDP. The UK is about 32% of GDP. If we were to move Nigeria's tax to GDP ratio to 20% of GDP, we could yield about as revenue to the government. Now, if we had 29 trillion naira revenue to the government, we wouldn't be
having this discussion.
We wouldn't be having this discussion.
Okay, but see, the challenge with that, though, is that you're talking about increasing it, which is on the common man like myself, right? And you and I, the common people. So that's where the tricky part is.
But that's the beauty of it. So the idea is you can grow that revenue without increasing the tax rate. Because what you're saying is that the productive capacity of this economy today is at the level where we can generate that revenue if everybody were to do the right thing. So all you need to do is focus on encouraging Nigerians to do the right thing by contributing to national development, by paying their taxes as and when due. Pay the right duty when you import goods. Don't smuggle them in at no duty. Do the right thing. Contribute your quota to national development. And we could be solving our revenue problems.
Okay, so what about, and you've already addressed this just now, but the building of the fiscal buffers with where we are now, it's a tight situation. How can government possibly do this?
Well, it's a very good question you've asked. I think we'll all have to think through that. We don't have sufficient fiscal buffers to withstand these shocks. So we've got to think through what we can do to improve our capacity to withstand, especially external shocks.
Right. Right. Okay. So another thing that has been discussed is reducing the cost of governance, which, would involve maybe cutting the civil service. I mean, these things are easy to say on paper, but as far as the practicality, okay, we only got about a minute, but in a minute, how do you think the practicality of reducing, costs, overhead costs to government?
Very difficult to do, particularly for public sector spending. So, of course, you know that the options open to the private sector to reduce cost and expenditure is not always open to the public sector because of different drivers. But you can start looking at efficiencies. You can start looking at other protocols for actually managing your cost of in the budget for 2020, I know that the budget was predicated on the assumption that we will bring in all agencies of government and start watching their costs a little bit closer. So I think 2020 represents a very big step by the government of Nigeria to actually get better control around their costs.
I like your optimistic outlook, sir. We should have you back to monitor and see how things are going.
Happy to be back.
Thank you for joining us. Mr. Ajibola Olomola, Senior Partner and Head, Deal Advisory, Tax Regulatory and People Services at KPMG. Thank you for joining us on the Global Business Report.